Great, thanks. I am going to take this off. So I appreciate the invite to be able to do this, and I had the flu all last week, so I'm glad to be back. First day back to work in a week, so I'm trying to get caught up. My job is to not put you to sleep with this riveting, exciting topic of bookkeeping and accounting. Yeah. Mic drop right there. So I'm why is accounting and bookkeeping important? I'm just going to ask you. I mean, or why do you do it? If you do it. Tracking. Okay. I like that. Who said that? Rick. It's tracking. It's a game. It's taxes, IRS. Anything else? You want to see what your profit is? Bottom line, profit and or bottom line. Well, hopefully it's a profit, not a loss. Yeah, you're not allowed to talk. I'm just kidding. No, go ahead. For decision making. Hiring. Decision making. Anything else? Any other reasons? Income tax preparation. Okay, yeah, taxes, IRS. That's usually the one thing that I hear, because I got to file my taxes, so that's why I do it. And that's the only reason they do it. Can I get a raise of hands that that's the reason you do it, and the only reason you do it? Wow, this is a good group. Thank you. Well, you're with Marilee. So that's usually what I hear. And if that's the reason you do it, save yourself money and do it, and do your bookkeeping. Pay somebody to do it once a year. Don't do it monthly, because you're not getting any value out of it. I'm all about value. So don't spend money if you're not getting any value. It's also why I hate car salesmen saying buy a vehicle at the end of the year. It's about the worst thing you can do for taxes, because of the value. Oh yeah, the financial person. Thank you very much. Yeah, no, I hate that. There's many better, much better ways to do tax planning than go buy a vehicle. So you're letting your car salesman be your tax planner. So anyway, back to, and really it's about managing. The number one reason is to do it is to manage your business so that you have the information that you need to manage your business better. What information do you get when you do your bookkeeping? P&L, sales, P&L, revenue and expenses, payroll. What else? What you're giving away, charity. Okay, charity. Don't do charity out of your business. Yeah, you don't get the write-off. It's a sponsorship. It's advertising. What other information do you get out of doing your bookkeeping? Health and wellness of your business. Health and wellness of your business. Health and wellness of your business. What else? Okay. 1099s, vendors. Yeah. No, I'm seriously. There's a lot of, so every business has different things. Every business needs to have different key performance indexes. And most businesses have four main ones. Most businesses have four main performance indexes that they need, that if you can get those four in line, that's over 90% of running a profitable business. Those four things. That's it. And then the last, 8% or so is all the little fine tuning of all your other expenses and so forth. So construction, signs. Do you know what your four main items are for your business that you need to keep track of? Materials, labor, we'll call it overhead. Overhead. Okay, that could be, typically not for that capital purchases. Sales. Yeah. Those are the four things right here. That if you've got these under control, and overhead, I'm talking rent, utilities, primarily. I'm not talking office supplies. I'm not talking advertising either. Yeah, that's part of this, that other 8-10%. These are the main four things. Sales. And let me just kind of go through. I'm going to talk a little bit about a profit. Well, let me ask this first. So what financial statements do you get when you do your bookkeeping? You're going to get some reports that you can look at so you know what decisions to make. There's a balance sheet and there's a profit and loss. They can be called different things, operating statement, different things, but revenue and expenses. But you've got a balance sheet and a profit and loss. Which one's more important? I love that. What information you're looking for. But if you're looking for you, what's more important to you? Profit and loss by far. Okay, let me ask you this. Is it important that I know how much cash I have to pay my expenses for the next week or month? What report is going to give me that information? Balance sheet. Is it important to know how much I have to pay in the next week or month? And what report gives me that? Balance sheet. So from an immediate standpoint, knowing what resources, what assets I have to continue my business and what I have to pay, I actually think the balance sheet is more important than the P&L. And people don't look at it. They might look at their bank account balance, but they don't look at it. But it tells me the value of the company much more than a P&L. The other thing is a balance sheet. Let me explain this. A balance sheet is like a picture. It tells you what your business is at a specific moment in time. It's a picture. A P&L is a video. It tells me what I've done over a period of time. Okay, that's really kind of the difference there. P&L, what I do last month, what I do last year, and it's a report of what has happened. The balance sheet tells me where I am right now and how am I going to move forward. How many of you do budgets for your business? Projections and budget. Oh man, I love that. This is a good group. That's about a third of the group actually does that. Most businesses don't. They run by the seat of their pants. And doing the bookkeeping allows you to, who said it was a game and a scorecard? Rick. I actually love that. For a lot of my clients, I put together a game and a scorecard for them. Not all of them will budget because they don't listen to good advice, good coaching and good advice. So, setting up a budget and, do you want to do better than last year? I mean, a lot of people, they don't look at their bottom line till the end of the year, unfortunately. And, it's hard to know if you're winning if you're never looking at the score. Like U of A. Losing. Anyway. ASU fan here, 2 degrees from ASU. And let me just go back to the P&L right now. So when you're putting together a chart of accounts that's going to give you what you want to see, how do you decide how to put that together? I mean, most people here probably use QuickBooks. It's an okay program. It's actually a phenomenal product for the price. It's dirt cheap, about $500 a year. And a lot of people are like, that's a lot of money. No, it's dirt cheap for good accounting software, and it'll do a lot.
So,
yeah, go ahead.
I was going to answer your question. So we just did ours for the chamber, and we looked at for the chart of accounts is what you're talking about. So
yeah.
We picked certain things, like we have 2 golf tournaments here, so we put fall golf, spring golf, and then we put signature events. We just had a big signature event, and then membership. So those are kind of our 4 big income, revenue supplies.
Yeah.
And so then we actually went down and took a look at, well, what's important in the fall golf tournament? Like what's important in that? So we did subcategories, and then we would subcategorize some of those, which we would just kind of follow along. But same thing with membership, renewals versus new members, how many are coming in. And then signature events like Ticket Spot, and then revenue gain from raffles, listing polls, and those types of things. So we did categories, and we did subcategories.
So you had information that you wanted to see.
Correct.
And you set up your chart of accounts based on the report that you want at the end.
Right.
What I'm getting at is, what is the information that you want out of your accounting system? And that is how you design your chart of accounts, based off of the information that you want out of it. Don't put it together and like, well, I want this, but that's not broken out. So figure out what it is that you want to see, what's important, like these things right here, and design your P&L so that it gives that to you so you can compare that to your projection or budget. So I'm just going to start out a little bit, and I'm going to use this. I'm going to use you as a guinea pig. So you've got sales, and I'll call it, for lack of, I'm going to use 2 different terms here, and I'm going to use them a little bit interchangeably. Cost of goods sold, or cost of sales. If you're in a service industry, your labor is going to be up in there. Cost of goods sold / variable costs. Variable costs, where you get to a gross profit margin. And then you get to operating costs, operating / fixed costs, and your net income. That's a typical P&L right there. Got my sales. I got my cost of goods sold, or my variable cost. So every time I sell a sign, what are the costs associated with the sign? Materials, labor, etc. If I don't sell anything, that's going to go down here in fixed costs. This is kind of that overhead nut that you've got to cover each and every month. And so this is right here, this right here, big item, which really gets us to this. This is a key percentage for me when I'm looking at accounting, is that gross profit margin. And then my fixed costs. This also tells me my break-even point. This tells me my break-even point right here. If I got fixed operating costs of $10,000 a month, and my gross profit percentage is 40%, to break even, I got to sell $25,000 a month to break even. Just right like that. That's what it tells me. So I've set up the P&L and the information so that I know what we've got to do. And then because right here, 40% of 25,000 is $10,000, my gross profit that covers my overhead. And inside this overhead is my rent, my utilities, and I'm looking at those percentages. Knowing this information and being able to compare it with your competitors or your industry, would that be useful? There's a lot of information out there from your industry that will tell you the percentages of your 4 key indicators of what your industry is doing. If you're doing better than your industry, is that important to know? Yeah, keep doing it. If you're doing worse than your industry, would that be important to know? And where that is, because then you can actually make decisions to move forward. So not only your information of your bookkeeping and accounting, tap into your industry and how are you doing against your industry? Because if your industry, is 36% and you're doing 40, that's great. However, you come down here and your overhead is, let's say your overhead is 15%, but your industry overhead's 8. Well, there's things to look at. There's things that you can do to improve your business pretty quickly. And so finding out your industry information is really important. And when you set your budget, that scorecard, man, I love that. Setting your scorecard up against what you're currently doing and your projections from a month by month basis or annual basis. Month by month is typically what most businesses will do. It's hard to make a decision when you're a year down the road and you get that information. Yeah. I love it.
So we have that actually out, and every employee gets to see it. We have a whiteboard that goes on a month-to-month for the whole cost, which we love that.
Yeah.
Then we also have other whiteboards in the sales department that shows like a weekly and a monthly total counts going on, daily, weekly, and monthly going on for the whole month, so that we can keep track of what kind of sales we're doing, which
And do you guys do that with sales? Do you do it with anything else or just sales?
I think the fabric department, has something.
So the fabric, yeah, so in your cost of goods sold, your labor and your material costs also. Yeah. And there's other operating things that aren't necessarily going to come in with bookkeeping. However, a lot of the information is stored in your accounting and bookkeeping information. And so, or a lot of the information is there. So one of the things that we do is we track number of tax returns prepared week by week through tax season compared to last year and the year before. And then we also track the average cost or average charge per return by different type of return, whether it's individual, partnership, S Corp, C Corp, nonprofit, trust return, and we keep all of those. Now that's not necessarily going to be in my accounting software. However, we've got it set up so that when we are doing invoices that we can actually track that, because we've set up some additional items in our accounting system to track all that. That's the key performance indicators that you use to manage your business. If you're tracking your employee cost and you have some say you're a retail store. Anybody here a retail store? Okay. And one of the big indicators there is sales per square foot of the store. And there's also some employee indicators there on sales versus number of employees. And so when your sales start increasing, you can use that information. It's time to hire another employee. Rather than just, well, we're really busy, let's go hire somebody. Sometimes you need to hire somebody sooner than you think, and right now it's just hard anyways. So, yeah, if anybody knows of a tax person or a bookkeeper, just let me know, because we're hiring. But yeah, profit, bottom line, it's really important to know. How many business owners pull draws out of their company before they know how much they actually make? Right. So they're pulling $8,000 a month out of their business, but they're only making $4,000 or $5,000 a month. That's hard to sustain it, even though it's profitable. So, understanding that, certainly the taxes. There's actually not a requirement by Congress to do bookkeeping. There's not a legal requirement to do it. Now, Congress does require that you keep records of all your sales and expenses, so that if you get audited, I just don't know how you're going to prepare a tax return without doing bookkeeping. And you've got to have all those records. I love the game. I do. I don't hear that very often, so Rick, you got me there. We talked about balance sheet. Balance sheet really gives you, it gives you your assets. It gives you your cash. It gives you your accounts receivable, what you can convert to cash in short order by calling your customers and collecting. I actually don't like accounts receivable. That's a nemesis of mine, because it's not cash. It's a sale that you've had to pay for either labor or goods, and it's not cash. You got to go hunt somebody down to turn it to cash. However, it's still an asset that you can do that. It's your inventory, it's your fixed assets, it's your equipment, it's all of those things. It's your liabilities, your loans, your accounts payable, your credit cards, and it gives you your equity that you have in the company. This is not the value of the business. This is a cost accounting of what your tax basis is in your company, that if you were to sell it, it would give you it's not a fair market value of your business. So, however, it will help you get there. All right, what else? Do we have any questions at this point? Because I got a couple more things to go.
If anybody has questions, let me know. I've got a mic here, so can you pick up for I actually have a question.
Yeah.
Obviously we're talking a lot about small businesses. Some people
We are.
here maybe just individual, entrepreneurs or basically sole proprietors.
Okay.
So how important do you feel, how comprehensive is the accounting that you would say that you would recommend to somebody, even personally, like, hey, for my own home, if you're for your own home environment, how would you do your taxes? Or not taxes.
Taxes, but my personal accounting.
Yeah. Do you use Quicken for your own personal?
Oh no. That's a 4-letter word. Quicken. It's an electronic checkbook, is what that is. That allows you to print out a report if you categorize things consistently. I don't like Quicken. I use QuickBooks for my personal. And I keep track of that, because we set a budget. My wife and I sit down, we set a budget on what we're going to spend. And then, we track it through, because we have some very specific goals of where we want to be in investing and putting into our retirement and savings and different things. And so I've got goals, and the best way to do that is to track it and compare, are you on track with what the goals are? So I recommend that for everybody, whether it's business or individual, so that, it's a cliche, but if you, I even forget what it is, but if you fail to plan, you plan to fail. Most people that don't have any savings, they're afraid of it, and they won't even sit down and put anything together. Because if you will put down and figure out what it is, where you want to be at the end of the year, whether it's paying off debt, whether it's putting savings in, whether it's retirement, you need to track that and see where you're at periodically. Otherwise, you're never going to get any growth. So accounting is important for businesses and individuals. And it's all about, how are we doing? If we got a goal to be someplace in 1 year, 2 years, 3 years, 5 years, well, you got to set shorter goals. And this is a way to track and be accountable, no pun intended, to yourself and your employees. And I love putting it up for all your employees to see on a board. And even if you're the only employee, putting it on a board. Here's where I want to be. And then you do your accounting and see where you're at and track it. It's a mindset thing, and it's a success thing. So
It's actually two separate works. One is what we've done, and one's a goal work. What we're trying to be in 6 months.
exactly. That's really what I've got. I mean, it's boring stuff. So it really is accounting.
I like how you said mindset, Jim, because I talked to a lot of my clients about budgeting and whatnot. And I was really off put when I was sat down with to talk about budgeting. And so I kind of changed the language around a little bit, and I create spending plans.
Yeah, see, I love that.
It's a budget, but it's just different language, and people take it on more because words are powerful, right?
They are. Words are powerful. And I'll use a projection more than a budget. Again, because from growing up or whatever it was, people say budget and they're like, you're going to constrict me. You're constricting me. And so people rebel against that. And so, what are our projections? What are our goals?
They don't even realize you're setting them a budget.
Right.
They don't even know.
Yeah. It's a plan. It's a spending plan. And I even call it an income and spending plan, because I think there are opportunities out there that people won't even accept as opportunities. And so mindset's a big deal in business. Getting your mindset to expand your mindset, and bookkeeping, and seeing what information is actually available. Can I ask, who in here has a business coach that they work with? No, again, that's great to see. I mean, teams have coaches to help them win. I'd actually, and you don't have to necessarily, a mentor or a coach or something that you can bounce things off of. Find out what the important things are in your business, in your industry, to be looking at. What is important for you? And you may have, your business may be a little different than what your industry is, or you can have niches. But it's about setting up your information in your accounting system to give you what you need to make good decisions to be successful. That's what accounting and bookkeeping is designed to do, not just, I got to file my taxes and send it off to my accountant, my tax guy. That's not what accounting is for, bookkeeping is for. Although that is probably about what 75% of businesses use it, small businesses use it for, and single entrepreneurs. And they don't take advantage of the power of the information and decision making to help make them more successful. So that's all I got. You got questions?
Do you deal a lot with S corporations? Like, I'm a W-2 employee
Yeah.
working for a mortgage company, and my wife is a realtor, for example. So she's completely on an S corporation, and it confuses the hell out of me. And
I love it.
To this day, I don't understand the whole concept. I got the concept of it, but why my accountant does it this way versus the other way, I'm still confused on it. So do you deal a lot with that?
Yep. and I recommend it. I mean, I probably have 80 realtors in that situation that I work with every year. Yeah, if a realtor is making over, and it used to be a lower amount with the way some tax laws have changed. If they're making over about $90,000-$100,000, they need to be an S corp. They need to be an S corp. Yeah. So they're going to be a PLLC because the PLLC is required for realtors. Sole proprietorship, and then they can kick it in retroactive to the beginning of the year if they have a big year. As opposed to waiting until the end of the year to set it up, then they can't do it retro for that year. But there's some liability issues, there's some tax savings, there's some retirement planning, there's a lot of different planning opportunities on being the S corp, and you got to do that.
Is there anything from an accounting perspective that you're seeing people aren't taking advantage of to its fullest, like in a big bucket sense?
What I just talked about. They're not using it to manage for good management decisions. Usually I will see when a company gets up over 25 employees, they start implementing this stuff. But below that, I rarely see it. And so they're not taking advantage, of the power of the information to make decisions, and the owner's doing everything, and they need to delegate some of that and work on their business instead of in the business. And they will, it's a mindset thing.
Self-employed versus business owner mindset.
Yeah, exactly. Yeah.
So,
And then we'll come over here.
So what do you think the most important thing is? Is it to set up the chart of accounts just so you start thinking about your business? What's the first thing to kind of get you rolling?
The most important thing for me are the reports, is the information out of it. So, I mean, most chart of accounts are going to be set up that you can not use 95% of it. The default chart of accounts you're going to get in an accounting system. 95% of it's set. You might, depending on your industry, if you're specialty, you can custom do some of that, but just get going and get your information in there, and then start looking at your reports, at your data and your information.
You have to gather. I've learned. You just have to gather the info and then take it a piece at a time. You definitely need probably all of that in some capacity. Not everything's different, but you need to be able to gather the info and start.
Yeah.
somewhere.
Yeah. And I'm going to tell you to outsource it.
Right.
You're not an expert in accounting.
Definitely.
Outsource it.
Drives you nuts.
Outsource it, and then learn how to read it, learn what it means, so that you can make good decisions. And that's what I love doing. Is it's not about plugging numbers in. It's what does it mean, and what does that mean for your business, and how, when you see that there, well, what does that mean I should do from a decision making on making my business better. And so that's, go ahead.
I was wondering, how are you using QuickBooks for some of your personal accounting? Are you just breaking down owner draws and equity for certain expenses? Because you were mentioning that you use QuickBooks super personal.
Only for me. Only for me, not for any of my clients. I don't know what they do, but for me, I do.
Anytime anyone's told me I want to use QuickBooks just for personal,
Yeah.
usually I'm like, oh, maybe you should use Mint or whatever. I don't even really know which direction to point them, but I thought that was a good point that you brought up, that you can use parts of that for your personal too.
Yeah, I mean, I don't want to get sideways, but for me, it's a mindset. My personal life, I consider very similar to a business. I've got goals and things that I want to achieve, and investments and retirement and all those plans. And so I set mine up the same. All my different bank accounts that I have set up personal, my investment accounts, my fixed assets, my house, my vehicles, any of those assets I put in there at my cost. If I were to sell it, I can quickly go in and see what my cost basis is on on my house to figure out what the gain is. And then miscellaneous, I'll put in some miscellaneous furniture and other stuff, jewelry, whatever, personal assets. And then same with credit cards, loans, real estate loans, any debts that I have in there, so that I can print something out and I know my cash, my investments, my real estate, my loans, and then the equity kind of falls out. And I do the same with the P&L side, income coming in, because I have 4 or 5 different income sources, so I'll track those so that I can see where I'm at compared to the prior year. I've got goals of what I should achieve there. So I do the same thing personally, and I just treat it like a business.
That's really cool.
Yeah. And then same with the spending plan, the budget on entertainment and food and all that stuff. Those are the big ones that I have a tendency to overspend. My wife is better than me. I'm married well. She's actually better than me on things that I want versus need. So, any other questions? Well, thank you for letting me come here. I love talking to you guys. I think this is my 3rd or 4th time doing different things. It's been tax stuff previously. And
Are you still in both up here and in Maricopa? Or are you primarily home based?
yeah, no, thank you for the question, because I started a firm down in Maricopa 20 years ago, and I sold it a couple of years ago because I was running for the state legislature. Yeah, I was running for state legislature, so I sold it. I have a similar thing where it's like I need to let things go out of my life so new things can come in. Otherwise, I get overwhelmed and nothing gets done well. And so I sold the firm. However, I'm still involved with the firm. I still work for the firm. I'm just not an owner anymore. Still the face of the firm for 20 years down in Maricopa. However, that's probably coming to an end. I do have clients in my own firm because I sold about 95% of my client base to a great guy. He's running a good firm. It's in the last 3 years, it's almost doubled again in size of what we've done down there. And then I've got some clients. I'm slowly deciding what I'm doing here in Ahwatukee, because I walk here. I live just behind Sprouts. They're on 48th and Ray. And so I do have some clients here. I think I'm probably a year out from like going full bore. I'm also the CFO of a nursing home, assisted living facility that I work with about 30 hours a week. So, and then I've got a home building company that I'm a CFO for. So I've got like 4 jobs right now. So that I'm doing.
So Jim, you're starting a brand new business, right? Or I'm starting a brand new business.
Yeah.
And what is the first thing that I need to do from an accounting standpoint? What's the first thing I need to put down on paper so that I can get started and say, I'm building from the bottom up. Here's what I need to do. Here's what I need to look at. And then from there, it'll just grow.
Go hire a bookkeeper.
Okay, hire a bookkeeper.
Hire a bookkeeper. I mean, you want good information from the beginning. It's a nightmare usually from like a solo entrepreneur or a small business that, they come to me right now. I need to get my taxes done. I started the business up last April. And
Do all the accounting for all that as well.
yeah, well, I mean, a lot of times they'll be like, well, I started in April, but I had a startup phase for like 3 months where I was buying stuff out of their personal account before they got the business account set up. And now we've got commingling of funds and trying to hunt down all the personal stuff that I want to bring in. Oh, and I had all this equipment that I owned previously that I brought into the business. And so, tracking all of that stuff down. So right off the bat, let's keep track of everything, and even if it's before you've set up an entity, you don't have to set up an entity. I recommend a single member LLC just because it's so easy to do and it's cheap. And Just get that set up when you're thinking about doing it. And start, even if it's all personal stuff, get all those receipts in a folder so that your bookkeeper can get those pulled in. And then a list of all of the equipment, the assets, the furniture, the computer that you've contributed into the business. You can write all that off. And a lot of people forget about that stuff. And so I do a lot of digging to pull all of that stuff into the business so that we can track it, especially for that first year when, So
What's the biggest mistake people make outside of not getting a bookkeeper?
I'll give you two. Writing off stuff they can't.
Like what?
That's a whole separate class.
Yeah,
For a meeting.
right. I know. Yeah. And missing expenses that you can. And both of those happen a lot by the same person. So, yeah, sit down with somebody like myself to do planning. Spending a couple $100 a year or a few $100 a year doing some tax planning that, because I'm going to go through these goals. What are your goals? And I'm going to tell you, get some goals, get some key performance indicators so you can actually manage your business and be successful. And then, are you doing this? Here's some, tax saving items. Boom, 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 boom. For a few $100s, and you're saving thousands of dollars, and you're getting educated about your business, and you're getting coached and mentored in your business to be more successful, and people are freaked out about a few $100s. Losing dollars, for saving pennies. And so getting professional advice in an area that you are not an expert in, it really is. And, same thing with, my neighbor told me I could write this off. Well, go have him do your tax return. It's similar to, well, he didn't get, he was able to do it. Well, he also drove 95 on the freeway and he didn't get caught.
He was able to do it.
He was able to do it. He just didn't get caught yet. And are you willing to risk that and break the law? Because that's what you're doing by doing some of that stuff. So it's writing off the personal stuff and then missing great opportunities. Those are two big things.
Is your office, do you just do CPA and taxing, or do you offer bookkeeping?
Yeah, we do bookkeeping. Although,
He said,
not right now. That's the guy right there. That's the guy right there. Because we're at capacity. So, right there. Yeah.
I don't want to take away from what you were saying, but I think the main idea is just, having LLC in the beginning, trying to use just the business bank account. To me, that's why the most important is to use one bank account. It's simple like that, because you don't need receipts for the most part when you're already doing that. Then setting up QuickBooks and training on it a little bit so you understand kind of what's going on. Maybe have someone, an admin doing parts of that. And then afterwards, once the bookkeeping, you know what's going on in there, then it's good to do tax planning. So you know what's the forecast for the year, should you do just an S corp, that kind of things. And a lot of times it's good to work with a company that does both of those things, or sometimes one person doing like bookkeeping, one person doing taxes. It really depends.
That's what's getting to the point of my husband and I both own our own businesses, and it's getting to the point now where we really need someone who does everything in one spot.
Yeah.
Because it's too much. It's just too much. Two separate people, and they're not communicating, and it's.
Yeah, and thank you for bringing that up. Absolutely. Get it set up. Get the business account set up immediately and start using that. Even if the business isn't generating any money and you have to support it, take that $5,000 and put it in the business bank account and then pay for things out of the business bank account. Get a credit card that you only use for business and use that. If it can be in the business name, great. If it can't, at least just only use that for business so that you're not commingling. And those are, from a bookkeeping, accounting, don't commingle the different accounts. So set them up, get that set up quick and right off the bat and start using those. Makes it much easier and will save you a ton of money in bookkeeping if you do that. Bookkeeping fees. Because they're not hunting down 16 different accounts where, 20% of this card was used for business and hunting all of that down. That's a lot of labor and work. So, all right. All right, thanks, guys.
So everybody, I know that you have little sheets in front of you. Everybody have a pen or something to write on those sheets. So please fill that out. Let us know what your best idea is. And I actually like to quickly we've got a little bit of time. We can go around the table right now. And I'd love to hear maybe the best idea you may have gotten out of today's presentation. I'll start with myself. The best idea is don't use Quicken. For my personal stuff.
So you're dropping Quicken this
I'm
afternoon?
dropping what I did
Yeah, that's a smart.
right
move.
before taxes
Right.
and all important.
Very smart move.
Yeah, before.
I didn't say that.
I
That's my personal preference.
Dee, what was your maybe your takeaway today?
To get myself a budget, I'm very bad. I'm very bad.
We're not judging.
No, I'm just agreeing.
We're judging.
Same, I need a budget,
Okay. The best friend right there.
I kind of had this epiphany like 2 months ago, but it was just make sure that you're tracking all those key performance indicators for what's important to whatever it is your business is. I got too busy operating in the business instead of on the business, so that kind of stuff to stay on top of. While it is time consuming, it is very important. So whether you're outsourcing a portion of it and then just getting the data or whatever it is, that was my takeaway.
Yeah, well, my takeaway after the 4 KPIs, I honestly didn't even think about those 4 specific ones. I would usually just tell clients, like, think about what you want out of this business. Do you want to work less? Do you want to double up the business? Having like a personal KPI, but at the same time, these 4 KPIs are really important. It can basically work for any industry. And I also thought like the idea of a scorecard using these KPIs on a monthly basis, that's good. A lot of the time you're not going to go back. You might not like look at how you actually did on a recurring basis.
So the KPIs, the key performance indicators you're looking at are those 4: materials, labor, overhead, and sales?
Yeah.
And that's what you're looking at? Okay.
That, and then maybe a personal one for your business. Like,
Okay. Yep.
Yeah.
Cool.
I feel like I'm on the right track, like commingling wise. I have my business account for my stuff. My wife has her business account, and then she has her S corporation, and we have 3 rental properties, so we have a different account for that. So I feel like I'm doing everything right, except for I'm hoping interest rates go down. So my business
Don't we all?
Yeah, this inflation cycle is taking a little longer than I'm used to remembering.
Yeah, recession.
Yeah.
Recession is tough.
I'd say just make sure you track things, keep track of everything, and don't do it once a year. Do it monthly. My dad was a bookkeeper and retired at 90. My daughter's a bookkeeper, has her own business with 33 employees. So I've been in it a while.
Just systems, like you mentioned, just having that system of keeping you on track, really, and not waiting till the end of the year, or letting things get to the point where you're like, I can't remember what this was for, and trying to recall everything as you go, and just keep your system up.
You saw what I've already said. I know for us, and just in the sales particularly, last year we started a program called ClickUp, which has been very helpful in our sales department, because it takes that on that level down to sales where we are breaking out, like, if we've got an estimate, okay, did that estimate become an order? Did that order get successfully through? And it keeps track of our customers and our monthly things. So, and it's taken me a while to get into that program and getting better at it now. So, I can start looking at what I did last year, and now I can start comparing that what I did last year and with whom as well. So that's been a big thing for me. So I guess just breaking down some of those categories even further is what I'm doing that. That's what's helping us.
I think for me, just today, still I do really need to manage my business better and actually following up with things and setting more structured budgets and just having those goals in place.
How about you, Rick?
Just applying systems thinking, not only having systems, but start breaking it down from the very first question, Jim, that you asked. What are your key performance indicators? It was just okay. Yeah, let's stop. Let's think about this. What are the moving parts, and what do I need to do with them? So that was very helpful. I just watched a webinar this morning on buying and selling. Boring businesses. And so some of the things that you said correlate very well. If you don't know how to read these reports, then you don't know, should I buy this business, should I not? So that was very hard. Thank you.
Still done.
You know what everyone else has said. I would like to say if you have any plans, we plan to pay.
There we go.
So,
Good comment.
It's very illuminating. What I got most out of it was what I'm doing right, which is like the whole way I have QuickBooks set up. I use it primarily for my invoicing, but it tracks some of the key indicators there between my labor, cost of goods sold, and any additional labor. Those are the key things in my business because it's primarily sales or primarily service. But then I also got some things I can focus in on where I can improve, doing more focus on the monthly reporting. Sometimes as a solopreneur, I get very wrapped up and get busy, and sometimes it's playing catch up on that side of it.
well, I don't run my business, so,
Okay.
but you know, I try to earn the stuff.
Yeah.
Now I'm getting my retirement money too.
There you go.
Yeah, well, two things. First, set up for, Jim said it, he said set up information to help you make good decisions. And I think that goes back to track your key performance indicators for me. Track your key performance indicators.
I like that a lot too, tracking the key performance indicators. And when I first started my business like 10 years ago, I think I probably didn't even do $6,000 in sales the first year, but I had an accountant because I knew that I could do it. I mean, I had no idea what to do. So I'm really glad that, I can go back the last 10 years and see everything because I did all that, which is really, really cool. I'm so happy I did that. So my key takeaway was accounting is for a lot more than just tax. It's a lot more.
My key takeaway is work on your business, not in your business. Because if you're so consumed in the business and you forget all of these other important aspects that you're supposed to be focused on, which helps your business grow. So, and I have an accountant, but he's not really doing much.
Welcome to the club. Yes, I've got that same problem. Oh my goodness.
I'm like, okay, where are all my reports?
Yeah, you get home, you get back to the office.
Yes.
Hey, I did all the
I
reports.
know it's
I
tax
don't know
season
what
and he's stressed out, but I'm like, where are my reports from the last 3 years?
Well, again, I want to thank everybody for attending our Idea Factory. We're going to be hosting.
Yeah, I get one too.
Yeah, oh, I'm sorry.
My key takeaway. No, my key takeaway is that this group, a lot of you are doing a lot of the great things with accounting and bookkeeping. So it's really good to see because a lot of different groups, and I've talked in different chambers and different groups, and this group is doing better than most. So, yeah.
I want to thank Jim again for coming out, taking some time out of his very busy schedule.
Thank you.
Just to let you know, our idea factories are hosted usually the last Monday of every month. We're looking at fourth. Yeah, that's a better way of saying it, right? The fourth Monday of the month, and with that, this next one we're going to be discussing branding. So put that on your calendars. This will be a good thing. Our own Renee will be part of our presentation team there with her because of Sinorama, and she works with a lot of people around branding and bringing their business. So it'll be really good. So please fill out the forms, leave them up here at the table on your way out, and then if you are interested in learning more about Power Partners, one of us will be contacting you. Please feel free to drop in anytime. We really love to have people come and join us. We're like a little family here. Dysfunctional family we are.
Fun every week.
But we have
It's
fun.
like home.
Yeah, exactly.
Oh, it's much better.
It's like Thanksgiving every Monday.
So before we